Okay, so welcome everyone, I'm config.json, and today I'm going to talk about a tool that I haven't stopped using for over a year, and that's volume profile. I don't use it too much either, but it plays a fundamental role in my market perspective as it provides me with horizontal levels as opposed to order flow, which is mostly reacting to new price action. So before starting, I got a thread about volume profile as well, which follows the same structure this video does, which is at first explaining the basics, then I'll go into a trade example, and at the end I will talk about naked POCs, which are the most important part of what constitutes my use of volume profile. So now I'll go into trading view and get started. First I need to introduce the concept. It's like a normal volume indicator, but it just measures volume sorted by price. So if this is volume sorted by time, if every volume candle represents the volume there has been in 1 hour. Every candle here represents the volume that has been at a certain price. So it's just like a flipped volume indicator. And within it, you can find two main things. The first would be the POC, which is the price at which the most volume has been traded. And then you can find the value area, which is this area which represents one standard deviation from the POC, which again is 70% of the volume traded in the least amount of space. And before anything, if you're using the drawing fixed range volume profile, which you'll find just here you go to the long position, short position section and go to the fixed range volume profile and you'll be able to use it. And also before using it, the default will be, if you go to inputs, the default row size will be 24. And that's not really detailed. You won't really extract value if you use the default settings, which are 24. So I recommend you to change the row size to a value of at least 200, but I personally use 300 since it's a bit cleaner, as you see there. So the first use case I have for it is using it within ranges. This is a weekly POC since I plotted it in Monday at UTC Open until today, till the current price. So the first use case, besides anchoring it to a week or a session, would be to anchor it to a range, just like this. And here you can trade the deviations of the value area, of course, before the range is resolved, before it breaks either up or down. So you would say that there is nothing to do with this information right now because the range is already completed, and just start using it around here. Maybe you just found the range here and you want to trade the deviations of the value area. Since in a range, price will tend to go back to where it is, and see, this is the first deviation here, you trade it back. But I like to do something for ranges which maybe you haven't seen before in volume profile, which is just disable the volume profile on the POC and enable developing value area and developing POC. So now you see the POC for every time, of course, starting here. So you see how the range behaves in relation to the POC to the value area. So you see this week here, this rejection, this one as well, this one too, although that's a week that goes way below the POC, it's closer to the value area low. You see another one here. So overall, you see that whenever it goes outside, it comes back not much after, just after the impulse ends. Same here, you got a strong wick and that was it. Same here, even here when it was not as clear. But this is not free money, of course. In first place, you have to define how to enter. This is just like a criteria to exit. You have to be using anything else to enter. Maybe just a sweep of this high to enter and then back into the value area. Same would apply for this one, although maybe you get stopped on that wick above. Again, it's not that easy. And the second thing is that the more you trade value area deviations, the more likely you are to lose money, because the range will end up breaking sooner or later and you don't know to which side. You see here, this looks like it's not hit here, it's not hit here, it just hit twice, once at the start, of course, and then once here. It goes below. So this will look like maybe there's a bullish continuation of the range, because it's been kind of trending up. As you see here, it's mostly POC rejections, is value area high deviations, and it could have been bullish, but that's just not relevant. It ended up going down. It was just news driven. That's not in the chart to just trade the deviations here. That's outside of the scope. Again, what the point here is that the more you trade these value area deviations, the more likely you are to lose money. So just trade with caution and maybe profit from it once or twice at the start of the range instead of waiting for 1, 2, 3, 4, 5 days to trade value area deviations, since that would be ineffective. And the second use case I have for volume profile would be naked POC. Naked POC just consists of taking a certain time, so for example a session, and let me enable the profile and the POC back. And this is the daily POC of the 15th here. If this is not hit the next day, so you see here after the close of the day, it's not hit, it's not hit, it's not hit, not hit even in this wick here, it's not hit. That's a naked POC right now. That's a naked POC since it has not been hit after the daily close. So you have another session here. The POC is not touched after the daily close. It's not hit, it's not hit, it's not hit. That's a naked POC, of course. And now you see here, it's totally broken up. That's bullish. That's really bullish, because when naked POCs are broken like this, it usually means that price will gravitate towards the next one. So if it's going up, it'll go towards the next one that we have above. And if it's breaking down, it'll go towards the next one that we have below. So let me just show you the other naked POCs I have plotted here. The next one would be at 29 almost. I have one at 29.3 as well. I have two here, one at 25.6 and 25.5 and 25. And the idea here, just entering at when the naked POC is hit. It gives good reactions usually when it just breaks through like we saw here before. That's really bullish in this case. And that is mostly what I wanted to say. You can trade volume profile in ranges. You can use naked POCs, say daily naked POCs in this case. You can also use weekly naked POCs, monthly naked POCs. Doesn't matter, as long as you just take a certain amount of time and go see if the POC is hit after that close or is not. And then you can trade a rejection of that POC. I think that was enough for it. I could be spending more time on looking at different ranges, how they behave, but I think it's mostly the same. It's easy, just trading back into value area with confidence, of course, and using these naked POCs as I just said. Twitter, if you don't follow me already, please follow me, subscribe to the channel, like this video, make it reach a wider audience, and see you in the next one.